Home prices are high enough. You should never pay more for your mortgage if you have to. And once you get the bite of seeing rental income and seeing this actually work, you want to tell people and you want to help people do the same. The house hacking movement has also been really popular. This idea that you buy a multifamily and it's your primary residence, so you can put 3% down. The other 3 units, you can rent them. How is that not a thing that every loan officer does? It's the easiest thing to do.
So knowledge is power. Applied knowledge is power, because there's a product for every buyer. It doesn't mean that it's bad or that it's good. It's just different for everybody. There are options. It's
So
gonna
many.
be okay.
I know.
It's gonna be okay. Welcome back to the NAHREP South Florida podcast. NAHREP stands for the National Association of Hispanic Real Estate Professionals, and I am Cindy Summer Perez, your host, real estate broker associate with the Ivan and Mike team at Compass, Florida, and the 2025 president of NAHREP South Florida chapter. This podcast is about bringing experts into the room so we can learn, we can grow, and we can go deeper than when we can at our live events. Today, I'm joined by someone I first met a couple years ago at a Compass Miami South Beach training, and he was teaching us about AI tools. And funny enough, some of those tools I still use today. He doesn't teach AI necessarily. He works with loans, so we're about to talk about that. That shows you just how forward-thinking he's always been. He's Florida's go-to wholesale mortgage broker, recently recognized as UWM's one of the fastest-growing loan officers of 2024, and the leader of the Rate Right team, with access to more than 270 lenders, more than any broker in the United States. Welcome, Yianni Garcia.
Thank you, Cindy. Appreciate it. Thank you so much. So happy to be here.
Yeah, welcome back. I know we'll talk a little bit about that because that excites me. And I'm excited to have you here.
Thank you.
Hola familia, my name is Cindy Summer Perez, and I am the 2025 president for the NAHREP South Florida chapter. NAHREP is the National Association of Hispanic Real Estate Professionals, and our mission is to advance sustainable Hispanic homeownership. With over 100 chapters nationwide and more than 58,000 members, we're proud to be part of a powerful network making a difference. Our local South Florida chapter, also known as the Miami Chapter 305, is ranked top 10 in the nation and number 1 in the Southeast region. Standard membership is just $49 a year when you select the South Florida chapter as your home chapter, and that gives you discounted pricing on our 4 local events, plus regional and national events. Or you can go for the Platinum membership at $250 and enjoy universal membership across all chapters in the region. Register now at nahrepsouthflorida.org/membership. And now let's get back to the podcast. Awesome. So let's talk about one of the questions that I hear all the time from clients and even new agents is, what's the difference between a lender and a mortgage broker? Can you tell us if that even matters? What's the difference?
Sure. No, it's a great question. I used to run a retail mortgage branch before I became a broker. So a direct lender or a retail lender is essentially an entity that funds their own loans, right? Mm-hmm. So they have their one conventional loan, they have their one FHA loan, and that loan is the only product that they have, right? Where a mortgage broker, we have access to many wholesale lenders. So it gives us 2 superpowers, essentially. Pricing, right? We are able to not only quote wholesale rates, but we have 270 plus lenders, right? So it's like having 270 lenders competing for our client's business. So it helps us from a pricing standpoint. And then choice, right? When this was 2023 when we switched to the broker, when I moved my team to the brokerage, one of the things that I would see is that, clients were a lot more rate sensitive, right? And of course, home prices were going up, interest rates were going up. So, you should never pay more. Home prices are high enough. You should never pay more for your mortgage if you don't have to, right? And so I was seeing a lot of price sensitivity around rates. And I was also noticing that, we just didn't have enough niche programs for the needs of some of our clients, like condos that are non-conventional that require niche programs for that, which I know
Yeah.
we'll talk about later.
Yes.
Foreign national loans, 5+ unit multifamily, commercial, construction. We've been able to get into a lot more types of deals and help
Yes.
more clients, and that's just been really fun.
You can go beyond the regular, first-time home buyer purchase. When it gets creative, then you're the go-to person.
Exactly. Yeah, we can
Okay.
do, and a lot of times you have a client that buys their first home and then they want to build a new house, or they want to finance the lot and the construction. Like, how do you do that, right? So we're able to do just a lot more cool stuff like that.
Why do you think that's important here in Miami or in Florida overall?
Well, I do loans in many other states, but I find that Florida has a broader mix of buyers, right? You have foreign national buyers, a lot more foreign national buyers here than other cities. You have a lot of self-employed individuals that need different types of loan programs to have a higher buying power, like a bank statement loan or a P&L loan. You have folks that want to do fix and flip or do
Yes.
projects like that and want to be able to finance. So it's just a market that has a lot of variability. So when you can offer that to your realtors can serve more clients. Everyone's happy.
It's a lot of people that come from outside of the United States that end up in Miami because we go everywhere. From Miami,
Yeah.
you can go anywhere directly. So I love that you mentioned that. You grew up in Puerto Rico.
I did.
Were you born there too?
Mm-hmm.
Where?
I was raised in a town called Trujillo Alto,
Okay.
Which is adjacent to San Juan. It means tall mountain. So I'm
Okay.
a mountain boy.
Good. I'm
Yeah.
from Carolina. I don't know if you knew that.
I did not know that.
Born and raised.
That's awesome.
I moved when I was 15 to the United
Okay.
States. Spanish is my first language as well. So I love that we get to connect there.
I love that.
And
Boricua de Carolina.
De Carolina, de pura
Come
cepa.
on. Yeah, I love that.
And that you're fully bilingual. It's so important being part of NAHREP. We are Latino inclusive, but we're not Latino exclusive. But as an agent working in Miami, I'm working currently with 4 clients, and all 4 of them are fully Spanish. And it's so important to have a lender that I can work with that will serve my clients also in full Spanish. We're working together right now with a buyer from, he's from Spain. Yes, he's from Spain. And I just love that you're able to just like get on the phone and speak in a language that he fully understands.
Sure.
So I think that's also like a win-win from having you on my team. You also studied at Boston University, from Puerto Rico to Boston, and you've called Miami home since 2012. And you're also a real estate investor yourself. Is that correct?
Right.
Awesome. So how has that background shaped the way you look at real estate and lending, and what made you passionate about helping others build wealth through that?
Sure. That was a great question. I mean, I came from working class parents, right, who instilled in me that, get into a good university and work your way up at a company and just build that path, right? The idea of financial independence and early retirement and kind of paving your own path, I didn't come from that. And even being able to go to a fancy school was all scholarships and
You have to pay yourself through it.
Yeah, I wouldn't have been able to do that otherwise, right? So, I have been very passionate about what's called FIRE, financial independence, retire early. It's this, if you do #FIRE on social media, you'll find so much cool content
That's
around this.
cool. Okay.
Which is young people who, people of all ages, but I'm seeing younger and younger investors who are kind of tossing aside this idea of working till you're 65 and retiring, and are using real estate as a vehicle to achieve financial independence and be on a path to retire much sooner in life. And so I started my own FIRE journey as a real estate investor in 2020. I've purchased single family homes in Florida and in Illinois and Ohio.
Wow.
And it's been really rewarding. And once you get the bite of seeing rental income and seeing this actually work, you want to tell people and you want to help people do the same. So for me, it's exciting seeing, new agents who jump into the market and are closing deals, and new buyers who are exploring this path of
starting the journey.
Exactly. Starting
The
with your
journey of
starter home.
FIRE.
Exactly. Like the FIRE journey. The house hacking movement has also been really
Yeah.
popular. This idea that, you buy a multifamily and it's your primary residence, so you can put 3% down, but the other 3 units, you can rent them, right? So you can put 3% down, but now you have 3 units that are income producing. And then after 1 year, you can move out of that unit that you live in and rinse and repeat that same strategy.
Yeah, I think that's one of the things that sets you apart because you're not just, okay, here you go, here's a loan to buy your first property, but you're also coaching
Sure.
the buyer, you're coaching also the realtor you're working with to find ways for this buyer to become financially independent. And at NAHREP South Florida, we believe in that. Our mission is to advance sustainable Hispanic homeownership. And we believe that we can move a Latino that doesn't know any of this, we can move them up by starting with an investment, right?
Sure.
Because once you go through the process of buying a home, you start learning financial things you didn't know before and avenues, right? Then you can go into investing, to stocks and other things, which is part of our NAHREP disciplines. So it looks like you started also with investing and then you went on to multiple other things.
I did, yeah.
Okay. So there you go. I love that. But Life by Design, let's talk about, I think a lot of agents and entrepreneurs dream of building a business that gives them flexibility. And you spent summers in London. Some of your summers. You just came back. How many days ago?
Friday.
Friday.
Yeah, so 3 days ago.
Today is Monday. Yeah, today's. And you still run one of the fastest growing mortgage teams in town. How do you do it? How have you designed a business that allows you to have both freedom and impact?
Sure. I mean, this is it's always been a dream of mine to live in London and have a second home there. I studied abroad in London back when I was like 20 years old, so about almost more than 20 years ago. I'm dating myself, and just fell in love with it, right? And I always wanted to have the ability to do that, to live there and here. But I worked in corporate America for 15 years before I started my mortgage business, so I just didn't have the flexibility to do that, right?
You were tied to your desk.
Yeah, I call it the golden handcuff.
Yep.
That salary that keeps coming, but you're
it's hard to leave because it's security. It's consistent.
It's consistent. Now we're in a high risk, high reward type of game, right? I believe that function follows form, or form follows function, right? You want to have the right people in your team supporting you. Especially if you're a realtor, when you're leaving for a month or you're leaving for 2 months at a time, you need to have a really badass team on the ground showing homes for you, right? And you need to be able to do this warm transfer of trust to your clients, where they don't feel like they're being pawned off to your showing agent for a month. No, they feel like this person is an extension of you, and you're going to be heavily involved regardless of your location for X amount of time, right?
Yeah.
For us, most of my clients don't even know I'm abroad.
Which is, I think, it's a superpower.
100%. We do all of our consultations through Zoom. I think COVID really helped also train people sort of with this idea of virtual work and having service providers that serve them virtually.
Yes.
Right? Very rarely do I have a client that wants to meet in person, right?
I wish I could say that now. I'm kidding. I
it's
like
a different
people.
game. Yeah. So that does help us. The fact that it's easier for us to do our job virtually. And then, I run a virtual team. We're all in different parts of the country. Some of us are local. Some of us are even offshore. So, having a daily stand-up meeting with my sales team to check in on what are the priorities, who needs to get pre-approved, are there any barriers that I can help solve, right? We do that every morning. Once a week we meet with our processors to see, okay, the active deals, how's everything going? I need to provide an update to my clients, to the agents, just to get briefed on everything. And then getting used to the time difference, right? So I started.
Yeah, because you're not sleeping when people are sleeping in London. You're up because we're here.
Yeah.
Or in Miami.
When people say, "Oh, how was your vacation?" I was like, "It wasn't a vacation.
I was working.
I was working. We closed a lot this summer.
That's good.
But you get used to it. Day starts at 1, 2 in the afternoon. You'll work till maybe 11 or midnight.
Wow.
So
then you got to get up early to enjoy the city.
Yeah.
If even the city's up at that time.
Yeah, you get up early. You do. It has its pros and cons, right?
Yeah. My principal on a team, and he also leaves every summer, and he will travel to multiple countries. But he has a team. Like we're here and we're doing the showings. If he needs support with the, any clients or anything like that. But it takes time to build that, and I'm so glad that you're able to do that because it's a game changer. I had my boyfriend asking me what I wanted to do with the retirement. I was like, I want to be in Spain like 6 months out of the year.
Yeah.
And he's like, what do you have set up in order to do that? I was like, oh yeah, I don't have anything set up. Like I need to another conversation.
And in Spain, that's the one drawback of London. They eat dinner early. So I eat dinner alone a lot during the week, which is not my favorite. In Spain, you can eat dinner at 10, 11 o'clock at night, and it's more culturally normal, right?
See, I'll go to Spain.
But yeah, at the end of the day, my coach always tells me elevate and delegate, right? In terms of making sure that what that means is that your clients need to feel that the team that you're working with, right, is at your level. And I always talk up my processor, I talk up my loan partner and my loan officer assistant, and make sure that they're trained in a way that they feel like an extension of me, although I'm still very heavily involved.
Yeah, no, I see that. Yeah. Let's talk about coaching agents and things beyond the loan. Something that stands out about you is how much time you spend helping the actual agents and not just explaining the loan products, but showing them how to compete and win offers, right? Whether you're reaching out to the listing agent or to the other agent, all of that. Can you share how you work with the agents from calling the listing agents, like I just mentioned, to positioning offers, and why you also push them to think beyond the transaction, like building a business that's sustainable long-term?
Sure, yeah. So, I think we're in the business of selling real estate and doing loans, right? And we don't make a living until we close a deal, right? So
we work for free, people. We keep telling you.
It's a labor of love.
Yes.
And so it's super important that the moment we have an opportunity to go under contract, that we do everything we can to win above other deals, right?
Yes.
So I think the call to the listing agent is the easiest thing to do to increase the chances of our offer getting accepted. And I'm surprised that there's so few lenders that do this because it's so easy.
Yeah.
Like I've called listing agents and they'll tell me something like, oh, in the 30 years that I've worked in real estate, I've never had a loan officer call me to vouch for their client and validate the pre-approval and blah, 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 blah. I'm just thinking, how is that not a thing that every loan officer does? It's the easiest thing to do.
Learn from Yianni, people.
Or
not.
And it's also a good reconnaissance too, right? Because sometimes, a listing agent will be real tight-lipped with you because their defenses are up because they're negotiating.
Yes.
With us, sometimes they can get a little more comfortable, right? And they'll provide insights into where the client is when it comes to the purchase price or the offer, right? So I've had situations where I can go back to you and say, hey, this is how the call went, and this is something I gathered from what's happening in the negotiation, right?
Interesting.
Yeah.
Okay.
And then one other thing I find is that, one of the things that listing agents hate the most, right, is an appraisal coming under, right? And most deals have an appraisal contingency. Of course, legally, I can't affect an appraiser's opinion of value. But it is very legal to have a hand-selected group of appraisers that are part of your panel to make sure that they're local and experienced. And so that if you have a condo in Brickell, instead of having an appraiser from Broward coming to appraise a condo in Brickell, which is a recipe for disaster when it comes to valuation.
100%. We're so hyper-local.
It's super,
yes.
Or Miami Shores, which appreciates very different than other markets. What you want an appraiser from that market, or that at least is very experienced in that market. So giving the listing agent that reassurance, and I guess reassurance is not the right word because I can't assure the value, right? But I do use language to increase their confidence around, the offer. And then obviously validating, we've done is a full pre-approval, right? We've done the DU certificate, income, assets, employment, all of that has been reviewed.
Yeah, I think it's so important when buyers come to me, and I'm primarily a buyer's agent. I would say 85% of my business is buyers. The rest are, sellers. When they come to me and they say, I have this lender from Colorado because they live in Colorado, and they're going to help me buy a condo in Miami, I go like this. It was like, are you open to talking to someone else? because they may not understand the condo market in Miami. And that's exactly how we have lost offers and we've lost properties because the lender doesn't fully understand how to work with association, how it works here in Miami. So I think there's a lot of power when a buyer comes to me and they allow me to suggest work with this lender or this lender, give you a couple of options depending on what you're looking for. And that's one thing that you've made me feel really confident in is that you are very savvy with condos. So I want to transition and talk a little bit about the market in Florida. That's for October 23rd event. You're going to be on the Market Pulse panel. I'm excited to have you. And I want to talk about what's happening, what's trending in Florida.
Sure.
Florida has more than 420,000 residential sales in 2024, with Miami-Dade alone topping $30 billion in volume. Even with higher interest rates, we've seen steady migration and demand, especially from out-of-state buyers or even out of the country. But financing is shifting. We know that. It's picking up now. So my question to you is, what do you see happening across Florida financing as we move into 2026, end of 2025, not just condos, but the overall market?
Sure. That's a great question. And by the way, I have a great script for any buyer who comes with a preferred out-of-state lender on how to dissuade them to use a local one. So if you
okay, good, yeah, give it to me, and we'll give it to you if you're a real estate agent that's watching this. Let us know in the comments and write a script, and we'll make sure that Yianni sends it over to you.
So the market in Florida is interesting because while we have seen across the country, things cooling down, and here too, right? There is more relocations domestically and foreign. There's a lot of foreign investment, like you mentioned. And that has kept the market, very strong. I think single family homes continue to appreciate in a very healthy margin. Condos are having their sale moment, which is also an opportunity for buyers who have been perhaps sitting on the sidelines waiting for a great deal.
Yes.
More than ever before, I see more and more sellers open to doing price negotiations and seller credits, which we can then use to buy down the rate and get the buyer's monthly payment, quite reduced. So that has been a nice reprieve from the COVID days where, we had 30 offers on a house, but in order to win, it was so tough, especially for the buyer who couldn't do a low down payment and couldn't go above ask, a very large amount.
Yeah.
So it's giving an opportunity to buyers who perhaps missed out on that wave to get a good deal. One statistic that I saw that I found a bit shocking, though, is that 20% of transactions that go under contract don't close.
Wow.
And that's 5% higher than the national average, 5 or 7% around there.
In Miami?
In Miami, yeah. And, that's so unfortunate.
So sad.
You work so hard to get that client because, I'm in my office doing pre-approvals. We work and we're following up with the clients and advising them and doing our consultations. But I take my hat off to agents who showed 40 homes or 20
we're in the
homes.
streets.
Over months to finally find.
In the Miami traffic, paying parking all the time.
Yeah.
And, oh my goodness, it's definitely work.
It's a lot. It's a lot. And so you finally get the deal done or at least under contract and it falls through, right? And why does it fall through, right? It could be an appraisal, right, coming under. And that's where I think the appraisal panel can help us.
Yes.
When it comes to condos, it could be, we go into the condo blind, not knowing anything about the condo. We don't know the financials. We don't know if they're going through the 30 or 40-year recertification. Not we, but
yeah, there are
buyers.
things that have changed now. Like as a realtor, we know about the condo writer and all those things. I, as a realtor, before I go under contract, I personally ask for the minutes and the budget and the financials. But of course, you got to go deeper.
You do, and not a lot of agents are as experienced as you are, right? So if they're newer in the industry, they may go into it thinking, okay, I have this buyer, he's putting 5% down, and we're gonna go and we're under contract and we're good to go. And actually, I'll tell you a quick story. I got fired one of my first deals, And
Tell me more.
Where's
the tea?
And the realtor got fired too.
Oh, wow.
And you make a mistake like this once, you never make it again, right? And what happened was that the buyer could only put 5% down, right? So if you're putting 3 or 5% down, it has to be a conventional loan. There's no other loan programs that go that low, unless it's like a VA loan or FHA. But also those require the condo to be approved.
Yes.
So we went under contract. The first week that the buyer's under contract, they're out of pocket like $2,000 between appraisal, inspection, a condo questionnaire fee, condo application fee, right? And it's not until week 2, sometimes even week 3, depending on the HOA turn time on that condo questionnaire, that we find out, the seawall's being rebuilt. They have a structural litigation.
Oh,
they, all these things. I did review the budget, but these other things were surprises, right? And at that point,
wow.
There's no way that we can do an unconventional or a non-warrantable condo loan, but those down payments are higher, right?
20, 25.
Yeah, we do have some that where you can go 10 or 15.
Okay.
But the buyer couldn't do that.
And he's already $2,000 out of pocket.
Yeah. So the buyer's like, you should have known this. That's what the buyer's gonna say to the realtor, to the loan officer. You should have known this. And you know what? We should have. And he bought another condo with another agent and another loan officer a few months later. I saw it on Instagram and I was like, damn.
Ouch.
Yeah. And
shot to the heart.
Yeah. So after that, I'm like, I'm going to be the condo expert. I'm going to know everything about every condo as much as I can so that my agents don't have to go through that. Especially if you're working with a buyer who's, down payment sensitive.
And there's layers here, right? Like before you're the first person that the buyer should see, right? To get them pre-approved prior to seeing showings. But even if a buyer comes to me and they haven't gone through the pre-approval process, I have a buyer consultation with them and I sit them down. What are you looking for? Is it a house or is it a condo? If it's a condo, okay, then I walk them through that, what to expect, because they may not know. They may be coming from outside of Miami and they have no idea what the process is. Even a rental. To rent a condo, they say, oh my goodness, in Miami, you got to do first security and last and an association for the condo. And you got to put the offer with the, with the landlord. And then you got to do the application with the association. There's so many different steps with the condo, but it's not impossible. You just need to have the right team.
Yeah.
So since we're talking about condos, let's get into that a little bit. About 60% of Miami's housing inventory is condos. And after the Surfside tragedy in 2025, new condo laws now require stricter reserve studies and higher HOA fees. We've seen it. We've heard about the assessments. And many banks are pulling back on condos altogether. So, Yianni, can you break down why condos can be tricky to finance and what agents should be watching for in 2025?
Well, the key to, I think, successfully getting a condo deal done and not being part of that 20% of contracts that start and don't finish is, know before you show. Like if you're going to show your client 7 different condos, send me the list of those condos. Let's see if we have them in our database to see if we've already done loans in those buildings.
Which I did when we started working together.
Absolutely.
And I didn't even know you wanted that.
Yeah.
I like that.
Perfect. It helps, because what does a budget look like? What does the master insurance policy for the building look like? Do we know if they're going through any, 30 or 40 year recertification or any ongoing structural? These are the things that will help us curate, the list of condos that you're going to show that buyer. Now, if the buyer can put 20% down, short of the building having some serious issues, like safety issues, a building that's so bad that you wouldn't want your client to buy there, we can do pretty much any building.
Okay.
But it's when the buyers have those low down payment requirements where we have to really be careful and know more upfront so that we are not showing them condos that they ultimately are not going to be able to finance.
And I personally, as a real estate agent, will filter all the condos that may have X amount of dollars in association fees per month. So if I know they can only afford X, I will put condos that are $1,000 or less for HOA. Because in Miami, it's easy to see the $1,500, the $2,000, the $2,500, the $3,000 a month for maintenance fees. And someone coming from out of town will say $1,000, that's a lot. I'm like, well, go find me something under that and in the budget you're looking for, right? So knowledge is power, applied knowledge.
Yeah.
is power.
And that reminds me, when I do my initial consultation with clients, and if they're not seasoned condo investors in Florida, I talk to them about the process like you do. But I also, I also explain to them what's in that HOA, right?
Yes.
Because yes, an HOA may be $1,000, right? And that may seem high, but the homeowner's insurance on a condo is half, if not less than what it would be on a house, because a portion of the insurance is covered by the master policy,
Yes.
which is paid by the HOA. And then, for a house, as an investor, you want to put anywhere from 5 to 15% aside for repairs and things that break. And, with a condo, you really don't have that cost, right? So it's important that clients don't get super stuck on these things, like an HOA being also a higher HOA means they probably have reserves, which means less likelihood of you getting an assessment in the future.
Right. And I want to encourage people who are listening, because when I'm reading in social media, people that are not from South Florida, and they're talking about never buy a condo in your life, that is hell, etc. But you have to understand there is a product for every buyer. There are people that are in their older years that have been in a house for 20, 30 years. They're done doing maintenance on the house. They're done fixing a pipe that broke or the AC or anything else, and they really just want to live an easy life. They've already had the income coming in, and they want to be in a condo. They don't have to worry about any maintenance. They just enjoy the pool, and they enjoy having someone else take care of that maintenance. So don't be discouraged as a real estate agent if you're listening, right? Because there's a product for every buyer. It doesn't mean that it's bad or that it's good. It's just different for everybody. So I want to talk about pre-construction.
Sure.
Because a lot of my business is also pre-construction. And Miami has over 20,000 pre-construction condo units in the pipeline right now. These buyers may not close for 1 to 2 years, sometimes 3. I just did 2 closings that are a reserve that took 4 years. We know that it can go for a little bit longer. So what should agents know about preparing buyers for financing and pre-construction, especially around rate locks and approvals?
Sure. Well, to get a traditional mortgage, you need to have a property that's already built, right? It needs to have the certificate of occupancy. So oftentimes when buyers are looking at these new construction programs, new construction condos, it's not going to be built for a year, 2 years, 3 years from now, right? So what I've done in the past is, a lot of these new construction buildings have hefty security deposits that you have to put down 30, 40, even 50% to secure the unit, right?
Over time, let's be clear, that's going to be over time. Yes.
Right. So sometimes what we do is, they put the 50%, the 40%, and then once we're like 90 or 60 days out from receiving the certificate of occupancy, we'll resume the mortgage process. And then at the closing table, because we're financing 80% or 75% of the building, they'll get that 25 or 30% back that they put in the initial deposit, right? Minus closing costs.
That's great.
So yeah, they get that money back because we're financing more than what they put in a deposit. Oftentimes too, we can do creative things with other assets that they have that may be able to be leveraged to fund the deposit, right? Maybe we can do a home equity line of credit on another property that they own, and then use that to pay for the deposit. I've done that. There's also a technique called cross collateralization, which is basically a loan, and these are very popular for high net worth individuals who are buying very luxury, ultra luxury properties.
Yes.
Where, the down payment may be 40%, right? Or 30%. But there's lenders who will say, okay, well, we'll put a lien on your house in the Hamptons for that 30%, and you just come out of pocket 5 or 10%, right?
Okay.
And it doesn't cost them anything. Of course, if they sell the house in the Hamptons, they have to pay the lien. But, it could be done in a stock portfolio, it could be done on a yacht, it could be done on another property. So that's a creative way to get into very, ultra luxury properties without having to come up with that big of a down payment.
And they don't have to think about interest rates. They're doing that lien, right?
Right.
Against their asset.
Exactly.
Okay, that's really good.
Yeah.
I have a lot of people that have come to me and will ask me, well, what if I don't get a loan? What if I'm on the hook? Because when you're buying pre-construction, it's a cash transaction. So you're locked in with the developer, so you have to close yes or yes. So what happens if they are locked in with the developer and then they can't get a loan? Has that happened to you before?
Yes. So about a year ago, I had a couple that were purchasing a new development, and they came to me. Basically, their cash contract had already, the money was already due, and they just didn't have it. Right.
Okay.
So they got an extension, but it was only like 10 days.
Yeah.
So what we did is that we did a hard money loan to give them the funds that they needed to, you know, fill the gap of the cash that they needed immediately.
Yes.
And then we refinanced them out of that into a regular mortgage.
Okay.
30 days later, about 30 days later.
So there are options. And a hard money loan, would you say the interest rate goes within what range?
It could range from like 9 to 11%. It's interest only. And it's meant to be a temporary solution.
Yes.
Right?
You can rent it or you can sell it or whatever it is you want to do. Keep it. Yeah.
You keep it for 30 days. You get a regular mortgage. You pay off the high interest bridge and just keep your lower interest mortgage. It's for like a quick fix for something else that we're trying to do. Or perhaps there's a property that you really want and the 4-point inspection comes back and the roof needs to be replaced, or there's structural issues that will make the house uninsurable. And there's no way for us to get an exception from Citizens for the roof or things like that. We sometimes can get
the insurance.
Mm-hmm. Then you can do a hard money loan, buy the house cash, right?
Mm-hmm.
Fix whatever needs to get fixed, which you can use some of the funds from the hard money loan as well. And then we can refinance you out of that hard money loan into a regular lower interest mortgage.
There are options. It's
So
going to
many.
be okay.
I know.
It's going to be okay. So since we're talking about interest rates,
Mm-hmm.
structuring payments creatively.
Okay.
Let's talk about that a little bit. The average 30-year fixed mortgage rate in Florida is hovering around, correct me if I'm wrong, 6.75 to 7%.
So it actually went down.
It went down, people.
We're in the hovering in the low sixes.
In the low sixes as of
Mhm.
September 2025.
Yeah.
That's great, but that was early in 2025 and now it's gone
Mhm.
down, which is why we've seen buyers entering the market now in September.
Mhm.
And it's still almost double of what it used to be back a few years ago. So with that, what are a few ways buyers can structure financing to make payments more manageable today? You talked a little bit about it, whether getting, seller
Yeah.
incentives. Can you break that down?
Yeah, the technique that I'm seeing most is getting the seller to pay for your rate buy down, right? So a rate buy down is essentially, let's say the market is giving you a 6.25 today, right? Well, maybe with 2 points. 2 points are considered discount points, right? Or a buy down. That's 2% of the loan amount. That fee paid at closing perhaps can bring your rate down into the high fives, let's say, right? And save the client $300 or $400 a month. Well, that 2%, if the loan amount is $1 million, it's going to be $20,000. But what if we can get the seller to pay for that 2% with a seller credit, right? That oftentimes is going to have a much bigger impact in reducing the monthly payment than doing a $20,000 price reduction.
So meaning don't get a reduction in price, get that credit to buy down the interest rate because it's a bigger impact.
On the monthly payment.
On the
right?
monthly
So
payment.
If the buyer's pain point is the monthly payment,
Yes.
let's go lender credit, let's go seller credit all the way, because the buy down is going to be much more effective than the 20,000 price reduction, right?
And there's 3-to-1 buy downs, 2-1 buy downs, meaning that the first year will be 3 points under what the current market rate is. Then the following year, 2, and then 1, and then it goes
Correct.
back to what the market rate is.
Correct.
Okay,
So
I got it.
You got it down to the T. So that's considered a temporary buy down,
Yes,
right? So the
okay.
permanent buy down is for the life of the loan.
Okay.
Where a temporary buy down, let's say it's a 3-2-1 buy down, and your rate is a 6%. Well, in year 1 is going to be 3. Year 2 is going to be 4. Year 1 is going to be 5, and then it's not until year 4 that it'll go back to the market of 6 that you locked when you first bought the home, right? Now, there's a catch to that, right? So it's great for the buyer who is so fixated on rate and also is going at the top of their budget, that for them, a 3% reduction on rate, which is going to be significant savings.
Yeah, big.
A $1 million home that can easily be $1,000 a month, if not more.
Wow.
Right? So for them, they're going to the top of their budget. Most buyers think, I'm going to get a promotion next year, and my bonus is in the summer. They're growth oriented. right? So if they're going to the top of their budget and the monthly payment is what's giving them pause, then the temporary buy down, especially if we can get the seller to pay for it, is a good way to get them
Where they
past
need to
that.
be.
Yeah.
Yeah.
Is it the best way of using a seller credit? I mean, you're prepaying interest is what you're doing at the
So
end of the day.
debatable.
So, I mean, it's good for marketing and getting these buyers unstuck from the rate. Not something I would recommend my friends to use unless they, because you're essentially prepaying interest over the span of 4 years. Is there really that there's not a real savings?
So permanent buy down.
The
makes
permanent
more sense.
it's gonna be less of an impact up front,
Okay.
but it's gonna be for the life of the loan. So there's gonna be a break even point. There's gonna be maybe, and I help calculate that for clients. I'll tell them, the discount point is this. On month 20, you're gonna reach the break even point, and then gravy after that.
Yeah, and the interest rate will be different from a domestic buyer that is from the U.S. than if it's a foreign national, somebody outside of the country. So let's talk about that a little bit, because Florida leads the nation in foreign buyer purchases, accounting for nearly 24% of all of United States international real estate deals last year alone. And Miami captured more than half of those.
Wow.
So what's different in documentation and down payment for foreign buyers, and what misconceptions do you hear most often?
Sure. So we have the largest portfolio of foreign national lenders in the country. We have about 30 or 40 of them.
We as in
the Rate Right team, powered by Nexa Mortgage.
Okay.
Yeah. And so we have a lot of options when it comes to what we can offer foreign national buyers, right? Typically they need to put 20 to 25% down, right? That's typically the range that we see with these loans. But you don't always have to source documents from their country of origin, right? Like you have what we call a full doc foreign national loan, which we do have to see how they make their money from their country of origin. And that can be document intensive, right? Because you're sourcing documents from a foreign country, perhaps they need to be translated. But we also have what are called DSCR loans that are for foreign nationals. DSCR loans, DSCR stands for debt service coverage ratio, and it's basically a mortgage that doesn't require any income validation from the borrower, right? We're just underwriting based on the projected rental income that the property is going to generate.
So you don't need the taxes from the buyer.
I don't need the CPA letters from Paraguay.
Okay.
I don't need the reference bank letters from Israel. I just need, the buyer, we need to source a down payment and the closing cost, and we just need to make sure the property cash flows.
Right. So we're running the numbers. You can rent this for how much, and this is how much the debt is, et cetera, et cetera. Now we're just going to get a loan based on that property cash flowing.
Correct.
Awesome. Anything else, any advice that you would give a real estate agent that's listening today on how to properly prepare a buyer prior to a purchase?
Well, you have to get pre-approved. That for me
Say a letter for the people in the back.
You got to get pre-approved, right? So
en español.
La preaprobación es eminente. The thing is that, if you're showing clients properties and they're not pre-approved, we just don't know what their purchasing power is. Also, I find in my initial consultations with clients, it's empowering when they know, right?
Yes.
And so, a pre-approval is credit, employment, income validation, liabilities or monthly debts, right? So we can determine the buying power. And sometimes you'll have a buyer that says, I don't want to get my credit pull yet, right? So we can do a pre-qualification based on stated credit and stated monthly debts. But, we don't know for sure until we have all of the elements, right? So, I think that's key. The pre-approval is key. Also, if they're buying in a condo, let's educate them with the condo process. Yes. As a buyer agent, especially now after the NAR settlement, right? Clients are becoming a bit more, you have to sell your value, right? You have to show them your value. And when you're a condo agent, you're doing a lot more work than in a condo lender. We're doing a lot more work up front.
I'm raising my prices today.
And so they need to understand the value, and you do that through education.
Yes. What would you say are the biggest mistakes that a buyer will do under contract? That you tell them, do not do this.
Yeah.
Like if they go and buy a car, for example.
Well, I do like my top 10 things not to do attached to the pre-approval.
Give me 3 or 4.
If you're going to take out additional debt, let's talk about it first. And if it's not essential, let's wait after the closing, right? if any of the funds that are, the move around money, right? Like if you move money from one place to another, and then we see large deposits on a bank statement, that has to be sourced, right? And
Yes.
where did it come from? Who gave it to you?
Was it a gift?
Right. So
Yeah.
if we already validated the funds and the pre-approval, don't move money around. And if you're going to, because you have to, let's talk about it first.
Okay.
If you have a husband or a wife, make sure they're aware that you're buying a house. Especially,
we have to talk about this.
like, essentially, we don't want to, or at least tell me so we can talk about what
If your husband doesn't know you're buying a house, you have bigger problems.
Sometimes we're separated and they think I'm buying a primary residence, I'm separated. Well, in Florida, the husband or the wife does have to sign. So,
Yeah.
You probably want to talk to a family attorney. You want to, we have to have a conversation about that, right? So there's some other things that, come up.
Don't buy a boat, don't buy a car, don't open a credit card, don't go on vacation, spend a bunch of money. I mean, basics, right?
Go on vacation after the close.
After we can celebrate together. We'll go on a
Yes.
trip together.
Yeah.
Awesome. Yanni, thank you for sharing your journey and all of this market insight. We're excited to have you at our event coming up now in October 23rd. And you've helped us navigate from condos to pre-construction to coaching agents to building real estate businesses to seeing real estate as a true path to financial independence, and that has a lot of value. For everyone listening today, remember to like and subscribe to our channel. And if you're local to South Florida, I want to personally invite you to join our NAHREP South Florida chapter. You do not have to be Hispanic to join because we're Latino inclusive, but not exclusive. And membership is just $49 a year. That's going to give you access to 4 local events, those regional and national events, where you can network, learn, and grow. And you're going to meet us in San Diego now in September. Excited to have you as well. But more importantly, you're going to be part of our big goal this year, which is to grow to 500 members by the end of 2025 as we pursue our road to chapter of the year. And we also have a goal of growing 500 Google reviews by the end of this year. So find Yianni and I'm Cindy Summer Perez, your 2025 NAHREP South Florida president. We're going to see you at the next event.